Today is the 28th of November 2010, and again, we'd like to welcome you to Megatrade101.com video presentation on the foreign exchange market. This is a follow-up video presentation based on our market view report November 22nd, 2010, where we also have a comparative analysis of the three major pairs, including the cross rates on the euro pound. On the fundamental standpoint, the crisis between the North and South Korean was the fuel that triggered and accelerated the US dollar to move much higher, other than the better than expected GDP report from the US. Over and above a shortened trading week due to the Thanksgiving holiday, the thin market would basically be able to have much more of a dramatic action in prices, fairly thinly traded rather, but with some of the major players still active while others are already celebrating their Thanksgiving holiday. However, today's market movement looks to be tame simply because all sectors of the market worldwide have been calm relatively because of the market holidays. Other than that, the market have already been absorbed as far as the crisis, although there may be some tension still escalating, especially so once the US South Korea war games would be terminated thereafter. So we would be expecting some US dollar corrections along the way, especially so with the euro as well as the pound making some corrective movements as of this time. Now, with that said, looking at the euro on a daily chart basis here and looking at it currently at 1.3243, which basically is resting on the Fibonacci fan on a 50% retracement, moving slightly higher or in between, where momentum have slowed down and even the moving average convergence divergence is still on a negative sentiment. So as with the stochastics, and volumes are quite low. Similarly, on a weekly basis here, the reason why we have shown you a Fibonacci fan formation here is to show you exactly what we meant by cross-referencing the prices, where it would be resting currently, as you could see here, that the prices is resting on the 50%, while it is on a 38.2% on the regular Fibonacci retracement application. However, it is still moving in between, since we are at the prices of 1.3236, while the high is only 1.33, and right now the low is at 1.3181, which obviously has a tight price range moving on a corrective move. However, there is no sign that there would be a reversal higher, but simply on corrective measurements. And you would be able to see that the next line here on the 61.8 Fibonacci fan would hold true at the 129.65 level, because if you look at it simply without it, here, if we will see if we can get it right, the trend line and the Fibonacci 50% is in parallel, where you would actually see that there is the reaction of a tight range still moving lower. Now, if we try simply to remove the Fibonacci fan, you would see that you would have no way to be able to indicate where the prices may rest or pause or continue because of the wide range between the 38.2 and the 23.6, where the low would be at 1.2655. However, it all depends on the whether the market would move in conjunction with the end of the month's movement with the coming economic reports from the United States. We will see whether the continuation moving lower would be done. And now, if we would be adding the Fibonacci here, then we would be able to see exactly where the next price would be. Okay. And the next level would be around the 128 level if and when the US dollar index would accelerate higher, although it is resting with its initial target of the 80.45, which happens to be the neckline price resistance support on the US dollar index. In comparison with the pound, right now, on a daily basis, it is working at 1.56 even, with a low of 1.5558, and slightly below the cloud, where the actual Ichimoku Tenkan Sen on inside rather than on the Ichimoku cloud formation, where it is still negative, while the Cajun Sen is at 1.5937. Relatively, it is still on a downtrend on a daily basis. Let's transform this into a weekly basis where it is slightly below the second span B, which is 1.5635. So the next level of support would be on the Cajun price of 1.5321, and believe it or not, exactly on the Fibonacci fan at the 38.2 retracement level, which still has a long ways to go, where stochastics are still open relatively at a 42.63% relative strength index. Momentum is low, and still the volume on a weekly basis is still high. Although the corrective movements, when it is resting right just on the cloud formation, that it is stalling, and while the euro pound cross rate on a daily basis shows the same, where it is within, or should we say, within the range of the 50% and 61.8% of the Fibonacci level, where the low here is at 0.8467, where we have indicated that the 0.84 even to 0.8450 is actually the psychological support price at this point in time. And having it said that the next level of resistance would be at the still at the 85.60 to 0.8620. With that said, as far as the Ichimoku Cajun Sen is um, located at. When analyzing the market, you could actually see what we're using here on a technical perspective is a combination of one, the Ichimoku, two, the Fibonacci fan formation, three, the regular Fibonacci retracement theory, four, the candlestick formations, five, the RSI or the Williams at the same time, which is the sixth, momentum is the seventh, the regular moving average convergence and divergence with this particular trading platform from Interbank FX is quite useful. Plus the volume makes it roughly you have a minimum of at least 8 to 9 technical tools that you would be applying over and above your moving averages. Well, it really depends on which level of technical analysis and tools that you are most comfortable with. Thank you very much, and we're looking forward to this week's trading. And best to your trades as always. Have a pleasant weekend.